How to beat 95% of the stock market pros? Yes, it can be done. It could actually be done very easily. So, um, trying to beat the stock market is very, very difficult. In fact, 50% of stock market pros cannot beat the S&P 500 over a 5-year period. 90% of stock market pros can't beat the S&P 500 over a 10-year period. And that rate is even higher for the retail investor. So why? Okay, the first reason is people overtrade. And that's because trading fees are cheaper than ever. When I started trading over 20 years ago, the cheapest you can really get a trade was almost like $19.95. There were some places that might have been a little cheaper, but now you can get trades for $5.95, and that just and the Robinhood app you can trade for free. So that really gives you a reason to overtrade. And statistically, if you overtrade, you will lose money, not just because of the trading fee slippage, even though the trading fees are lower. It's just that you're more easily willing to get out of a trade that moves against you in the short term, when in the long term that trade will probably work in your favor, because the stock market just normally floats upward over time. Second thing is people are just emotional when trading. The two biggest emotions are fear and greed. So, the real secret is you want to remove emotion from trading. And when you do that, by just trading an index like the S&P 500, you're taking away emotion from your trading. And in that case, you're going to beat 95% of the pros over a 10-year or longer span of time. Now, this advice, you're wondering, does this advice work? Well, let's go to the greatest investor of all time, Warren Buffett, who has specified in his will when he passes that 90% of his assets will be placed in a low-cost index fund that tracks the S&P 500, and the other 10% will be put in short-term bonds. So this is, Buffett, one of the few people that have been able to beat the market over a long, long period of time, said, look, after I die, just put all my money in a short-term index that tracks the S&P 500, and then just put the rest in short-term bonds. So my advice to you is follow Warren Buffett's example. Follow the guy that's amassed, an 80-something billion-dollar fortune. Is just take the majority of your money, put it in a low-cost index fund like the S&P 500. Then, if you want to speculate, just take a little bit of that money and just speculate with enough money that you don't care if you lose some or all of that money. And I would say, as far as short-term speculation goes, no more than 1 or 2 trades a year, really. Because if you do your research, you're going to find that one good stock out of 100 that will most likely outperform the S&P 500. And when you're looking at outperformance, you want to look at outperformance over a 5 or 10-year period, not over a 1-year period, because anything can happen over 1 year. Just markets can just have outlying moments. So, short-term speculation, find that one stock that you believe will outperform the market over a 5 to 10-year period. So, the simple secret is this: by trading less and removing emotion, you can beat the Wall Street pros when it comes to trading. So I hope you enjoyed this video. If you did, please be sure to like, share, and subscribe. Thank you.